I'm starting to see what technology will do, the leverage we're getting. In 2026, I think we catch up with the boutique property manager.
But it's in a different way than we probably thought about.
Now, all of a sudden, AI has come along. And I think by the end of the year, that 30-day PM is going to make as good of decisions as the 30-year PM.
There are a lot of markets like Denver, a lot of great boutique property managers. And I think that will continue to exist.
The world's made up of them. When I first got into this business, that's it. That's all there was.
You got a local bookshop where you might know somebody, they kind of know your preferences. The selection's not as big, the prices might be higher, but you can go there, get a coffee, sit down, find the book and read it. And then you have Amazon, and then there's Books A Million in the middle.
But when data becomes democratized, that we all are sharing the same data, it's going to be who can get it done for the cheapest. I think probably the point ultimately is don't get stuck there. If you're going to go, you better go big. Mm-hmm. Don't get stuck at the 2,000 to 3,000 doors. Not that being big is not really hard or small is not really hard. It's all really hard. All right, everybody, welcome back to the Evernest Property Management Show. I am Matthew Whitaker, your host, actually your co-host. I'm here again with my man, Gray Hall. Gray, what's going on?
Glad to be here. Just got back from NARPM.
We did.
Yeah, how was your experience with that?
It was great until I got home and got really sick. Mm-hmm. So I don't know which one of you out there got me really sick, but I'm coming for you.
Matthew did come in and said, Gray, I've got a question for you. Did you have a cold?
I tried to blame you first. I mean, that's fine. After spending 6 hours in the car both ways,
I'm the most likely
actually 12 hours in the car. You got little kids.
Yeah.
I mean, I was basically blaming your children for giving me this cold.
You did. Yeah. I would blame them as well.
For sure.
It usually is.
They've for sure given you a cold. Well, we're going to talk today about something I'm pretty excited about. It's actually something I posted on LinkedIn, and I got so much engagement that I thought, oh man, this is a subject we can dive deeper into and give our thoughts on. And in some of the pre-show, you had some different thoughts. Yeah. So I said, well, wait, let's not work it out before the show. Let's actually get into some of those thoughts together, and let's see if we can work it out right here in the middle of the show. So I'm pretty pumped.
All right, what's the hot take?
Yeah, the hot take is very simply this. It's don't get caught in the middle. And I think the future of property management is really a barbell. And I said in the LinkedIn post, I said, there's really going to be two groups that are going to win. There's going to be the boutique owners that are really focused on relationships. They know their owners. They're kind of like, they deeply know their properties. And they're going to win based on, in a world of AI and technology and transaction, they're going to win just solely based on relationships. And then the other side of that barbell is going to be the exact opposite. It's going to be automation. It's going to be AI. It's going to be unbundling of services. It's just going to be getting this thing done as efficiently and cheaply as possible. And I think the scary thing is the PMs that get caught in the middle. I worry that they're not going to have a deep enough relationship with all the owners to be able to compete on relationship. And they're not going to be scaled enough, have enough capital to be able to build on the technology side.
What made you start thinking about this?
I don't know. It's something I've been working out in my head. Like, what does the future look like? And I'll tell you, the last 120 days we have become much better property managers in the last 120 days. And I'm starting to see what technology will do, the leverage we're getting. Perfect example, we're going to go into probably some of it, but we just have leased more houses in a time where it's been really hard to lease houses because we freed up our leasing team to focus on different things. Mm-hmm. Maybe not more high return things, because communicating with any prospect is high return, but we basically free them up. And so, as we've thought about AI, it's not just gross margin expansion or basically making more money. It's how do we become better property managers? And I always feared the boutique PM. Mm-hmm. And I always had this faith that one day, because of technology, we're going to be as good as them.
Yeah.
And candidly, we have not been as good at them in the past. And the benefit we had is scale and cost. And so, because they were better at some things and we were better at others, mostly driving down the cost, we were able to compete with them. And I always had the faith that technology was going to get us to the point that we could compete with them based on execution. And I think that day is coming. I think we are 120 days. I think we're like in the next, I'll say this, in 2026, I think we catch up with the boutique property manager.
But it's in a different way than we probably thought about
For
2
sure.
years ago. Because when we think about like what makes a scaled player different, and over the past 15 years, there's been more kind of scaled single family. Multifamily has existed, but in the single family space, like this didn't exist kind of pre-GFC. And that has been the competition as we kind of grew from local in Birmingham to regional and the national. Oftentimes we got to think about like, well, what makes us different? Like, why would clients choose us? And the boutique, like when you lose doors to them, you kind of know, like they're the people that you call them and they pick up the phone on a Sunday night, or they know everything about the property. They know all the relationships with vendors. And that is a really, really tough thing to compete with when we've got, we're scaling or we promoted somebody and we hired a new PM and all that context is lost. And it was kind of like this cycle. And it was like this context and relationship was what we thought that technology could solve. But I think what I'm hearing you say is scaled property management in the future with AI will look different, and it will focus less on how do we have that same relationship, but it's how do we offer different things better. And I think there will be different types of clients that want one end of the barbell than the other.
I've always said if we can make a property manager at Evernest who's been managing properties for 30 days as effective as a property manager who's been managing for 30 years, we win. Mm-hmm. Like that's the model. And I'll tell you, like, what makes that property manager who's been doing it for 30 years so good? You mentioned one of them. It's context. It's like historical context of the house. Oh, we put this HVAC system in there 5 years ago. Oh, this is the one where the owner likes to do something this way. That's the context. The thing though that I think is also makes them very good is they've had so many reps that they also have conviction around data, and they don't know that it's data, but it's data living in their head. Yeah. Hey, I've seen an HVAC like this before. It's better to go ahead and replace it. I've seen a work order that looks like this. This is the right way to do it. So the great thing about somebody that's been doing it 30 years is they have the data in their head. They have the context. It makes them really good at property management. Now, all of a sudden, AI has come along, and it makes us great. It does two things really well. It goes back and finds historical context, and it's great at sorting through the data. And so the work order comes in, it can go get the context of anything that's happened on the house that's similar to it. And then it knows based on data, if whether that's something you should change out or whether that's something you should just repair. And so it's going to help our PMs make better decisions. And that's where we are. Like, we're getting there. And I think by the end of the year, that 30-day PM is going to make as good of decisions as the 30-year PM.
I think one other thing with talking about boutiques is like they customize it to whatever the owner needs. And you see there's a lot of boutique, and that has been challenging for us to replicate because you have newer team members in there. Processes have to be remembered to followed. But I've seen a lot of boutique do customize things for each owner based on what they want. And that historically was, well, if you want that, like, we can't provide that. And it always was terrible, like in a sales conversation, knowing like, I want to tell you yes, we can't execute on that right now.
Remember, we bought a company up in Nashville. This was like when
story.
you first started.
Yeah.
And the guy was literally, I mean, this was 2016. So, but
ACH was around.
ACH was available at this time. He was literally driving around depositing not as rent checks that are coming in. He was depositing owner funds checks. So he would cut the owner a check and go put the check in the bank on behalf of the owner.
It was like Venmo same day service, but it was your PM driving to your bank.
We were like, you can hit a button and this does it for you, right? Like, you don't have to drive your car. So, but to your point that boutique owners can do that. Let's dig into boutique because, again, I'm not here to say like AI disrupts the world and it destroys the boutique owner. Because I do think there are going to be, remember I said it was a barbell, there's going to be relationships that are important to some owners. And one of the great things we just read through was we were talking about it before is the PM Trends report that just came out that Peter Lohman, Jordan Wela put out. And one of the cool things that it said is that different owners in different, like the millennials, Gen X's, they all like different things and they have different needs and different wants. And so I do think from a boutique standpoint, you still have a lot of baby boomers. I've fallen into Gen X just barely though. I'm almost a millennial.
Are you really?
Yeah, I'm almost like
you don't strike me as an
I did
millennial.
it. Well, according to ChatGPT, I missed it by 1 year. And but those folks are still value relationships.
Yeah.
If you look at some of the data, it's still really important to them to have relationships.
So I think we'll talk about boutique, scaled, and then the kind of regional player in the middle. We'll kind of like walk through each of those. And what we think the future is going to look like for each of those business demographics.
Let's talk about the boutique.
Yeah. I think boutique, like you said, we always kind of compared because there are a lot of markets like Denver, a lot of great boutique property managers. And I think that will continue to exist.
The world's made up of them.
Yeah.
Like when I first got into this business, that's it. That's all there was. The largest one I had ever heard of was 5,000 homes. And everything else was somewhere south of 1,000.
Because I think boutique up to 200 or 300 units is like at the upper limit of any one person's like context window. Like how much can you remember? How much can you manage before you start? Like in the E-Myth, you go from the baker to managing the bakers and to the business owner. It's like a lot of people don't make that transition. And a lot of people just kind of ended up being in property management. There's very few people that like intentionally set out to be here. And so I think that's why there's a lot of fragmented kind of like mom and pop. And they're great up to that 250 to 300. How do you think that AI will change their business? Because I could see a way where it actually allows them to offer that boutique service to more people. And I think that they could also have access to better data, better technology. So like, why do you think that they will continue to exist on one end of the barbell?
Well, I just think it boils down to the relationship. Will they use some AI and some of the off-the-shelf software? Yes, absolutely. But I think you can only scale your relationships so far. And keep in mind, it's also how much data they can keep in their head. Yes, could you talk to 500 owners? Probably. Can you keep 500 owners' houses and all of that straight in your head? Probably not. Now you're starting to like reach the upper limits. So I think the thing I would say is if I'm deciding to take this like boutique strategy, it's how do I get really profitable, very few really profitable homes. And I've even heard there was a gentleman that was in the business back in Austin a number of years ago, and he just set a number. I think it was like 200. He just set a number, and when somebody would get ornery, an owner would get sideways with him, he would fire that owner and he'd just pick up one more house. And so he always managed around 200. And if he had 200, he would not go to 201. And so you created this demand, right? This built up, pent up demand, and because he restricted supply. I think that's probably what I would do if I was going to be a boutique owner. But you have to be able to compete on relationship. They're going to want somebody that feels almost like an employee managing their house.
White glove service. And I think in that PM Trends report, there are things that people will pay premium for. And I think that this could be at that end of the segment where, especially if you're not an investor trying to drive ROI or expand your portfolio, but you want the home just kind of cared for and you want that level of service, like people will pay extra for that, because I think there's a large subset of real estate owners that are not trying to maximize the ROI, and they'd be willing to give up 10, 12, even 15% if you can take away their stress and worries and offer them high touch customer service. And I think that's where like the boutique can win in that area. And we've bought a couple of these. They're challenging because what we do is different. But I think people would be willing to pay for somebody that can pick up the phone, because I think a lot of community customer service is going to go to chatbots and text. And I think there's a subset that just still want the phone to be able to pick up, still want to chat and have that relationship.
Yeah, the thing I would say too is, who is the client? It's probably one house owners. They have a high emotional attachment to the home. They're not worried about, you mentioned it, NOI. They're really more worried about somebody taking care of the home. It's not for people who are worried about NOI, that are EBITDA driven. Those are the people that are gonna look for somewhere where they can drive margin.
There's a property manager I've been talking to that I know in one of the markets we manage in, and they're looking at selling their business, and they check a lot of these boxes. They are boutique. They're sub 300 units. They've got a really small team. Started the business, kind of backed into it, 10 or so years ago, and they're super, super profitable. And so I think the interesting thing as well is like they have a lot of the relationships with the clients. I think that they can leverage AI and they can get more out of their team. They've maximized a lot of the fees. Like you can make really good money with 250 units, especially if they are at or above the median rent. And then you start attaching things like RBP and insurance products, and you start doing maintenance. I think they were driving a significant portion of their revenue in maintenance. And I don't think that that's going anywhere. I think people like that. I think I would consider using somebody like that in the market. Like they just know your property. They're hands-on. They're willing to go out there, and they can make a lot of money. And so it might be like a really high-paying job, but you can make a lot of money doing this. I don't think that segment of the market is going anywhere.
Yeah, couldn't agree more. I think boutique is here to stay. I think 5 years from now, boutique is still a viable business to run.
Yep.
All right, why don't we jump into the scaled? Let's go from one side of the barbell to the other side of the barbell. Let's talk about scaled.
How would you define scaled, and like where does Evernest sit?
Well, I don't think it is a number of markets. I think it is a density of markets question. And so I wish Evernest was more scaled than we are today, because I would rather have fewer markets with more dense homes, more homes, fewer markets. But I would say somebody that has over 1,000 per market, but in multiple markets, and probably somewhere between north of 3,000 to 5,000 doors. Because one of the things we do, we don't just think about it market, we also think about it regionally. So we think about sharing services across markets. So if I had 1,000 doors in 5 different markets, I may only need one head of leasing for all 5 markets, or one regional head of leasing for all 5 markets, or one head of PM for all 5 markets. So you get some shared services across each market.
How do you think AI is going to benefit or has been benefiting those groups?
Well, I think this comes down to efficiency and optimization of the business. I think when data becomes democratized, which I think you mentioned earlier, or maybe this was pre us getting
pre-show.
But when data becomes democratized, that we all are sharing the same data, it's going to be who can get it done for the cheapest. And the person that can get it done for the cheapest is the one that gets it done most efficiently. And I feel like that the bigger company you are, the more doors you manage in a market, the more efficient you can be.
So you think bigger players will compete based on price, and has that not become a race to the bottom?
I think there's no doubt that the bigger players are going to compete on price. And I ultimately think what's going to happen is, and we talked about this a number of years ago, could you compress price of management fees because bigger players make money on everything else down to zero? I don't know if that's going to happen or not, but you can compress the price for sure. And I think bigger players, especially once bigger players figure out AI, figure out how efficiently, they're going to get some gross margin expansion, but then they're going to be hungry for as many doors as they can possibly get. And they're going to drive down the cost to the end user because they recognize that density equals profitability.
On the pricing component, there were 2 groups I talked to recently that have grown in the hundreds of percents year over year. And the common theme between both of them is it was like not at zero, but like pretty darn close to zero. And so I do think that there is something there. If you have a way to be able to monetize residents or other ancillary products, I think that is what the scaled players have an advantage of, because talking about, I was talking about insurance captive. Like you have to have a certain number of homes for that to pencil where you're not taking on too much risk. And that is one area that a larger player can do that and a smaller player can't. And I do think that that's like a way that you can drive down at least the base management fees. And so it's not affecting the owner's NOI directly as much. And there are other ways to monetize. And the bigger that you get, there are volume discounts that you can get that you can pass on to your clients and you take a margin and everybody is paying a lower price. And so to your point on like, you've got to have density in a market. If you have one home in 52 states, you do not have density. But if you have, 1,000 in one market, so the 1 in 52 is a bad example, but if you have, 152 markets, that's not density.
Yeah.
And I think we've got to be thinking about that because we can't compete on the relationship like we just talked about with the boutique.
No, I think the other thing that's going to happen is these big operators are going to have such infrastructure in the markets, and we're starting to feel this now, that we're going to be able to unbundle services to the end user. And so just imagine a world today, we know that about a third of all the SFR, all the rental homes are managed by full service managers. The big groups, the reason most people don't use full service managers is price. They don't want to pay for us. But if you start to drive that down, each time you drive it down by 1 percentage point or $10 on the, there's a group that falls into it. And if you drive it down to zero, arguably everybody might be a candidate to manage. So all of a sudden, then how do they make money? They make money by unbundling services and doing a la carte things for clients instead of the full suite of services. And they pay for just the ones that they use. And the reason they can do this, the permission for them to be able to do this is very simply, they have the infrastructure in the market. So for us, in most of the 50 markets that we're in, to lease one more house is not that big of a lift, right? To turn one more house is not that big of a lift. And so we're going to be able to, again, because, and you think about this flywheel here, when you drive that down, you increase density. It kind of gets similar to the Amazon flywheel. Yeah. So I drive it down, I get more customers, I increase density, I still increase my gross margin because I'm able to do things more efficiently. Today's episode is sponsored by Crane. Look, if you've been in this business for any amount of time, you know how isolating it can be. When it comes to scaling past 200, 500, or 1,000 doors, the stuff that keeps you up at night doesn't always have clear answers readily available. You just have to know other operators who have been through it, and making those connections can be tough, especially if you don't know where to start. That's really what Crane is. It's a private, exclusive community for property management owners founded by Peter Lohman and Wolfgang Kroski. It's a place where you can ask almost anything and get thoughtful answers from other people in your same position. You can also browse other people's insights and get answers to questions you didn't even know you had on their website. They do monthly workshops, real-world dinners, and meetups across the country. Applications only open twice per year and spots go fast when they do. So head over to joincrane.co. That's joincrane.co to get on the wait list. If you're serious about running a real PM company, this is the place to be.
So we talked about relationship communicate. Like, what do you think the relationship looks like with scaled players? We used to think you can make the 30-day PM, have as much context. So how do you think that AI is going to change the relationship component? Because that's one of the biggest differences we're talking about here is not outside of price, but like people like interacting with competent people. And so what does that layer look like? Like, what does it look like today? Where do you think it's going?
I actually wonder if the end user, there will be some end users that still want property managers. So a property manager will exist at Evernest in the future, but there will be some subset as you go down that kind of like, I don't want to deal with a property manager, I just want it managed. There will be some subset of people that will use our technology, our data, backed by, some sort of LLM learning on our technology to decision by themselves with the system and then have us execute their decision. I think there's the potential for that in the future.
So less hands off, more hands on, kind of giving more responsibility or the ability to influence the outcomes and have all of the data, but then they can delegate that to somebody to get it done.
And if you buy the system, they delegate it to the system. I mean, if you said, hey, I just shouldn't name a number, but for X%, you can have a property manager that you can talk to. Mm-hmm. Some people are going to choose that. Yeah, I'm willing to pay a little bit of money just to have somebody kind of be with me and a thought partner and that knows what they're doing. And then, but if you wanted to pay like X minus 2% or X minus 4% to not have to, you don't talk to anybody, you don't have somebody, but you can use the system. Mm-hmm. There's going to be some people that do that.
Yeah.
That'll happen. And I think, again, then the winner is who has the biggest infrastructure that can get the work done in a very timely manner.
Because I think also one difference thinking about the infrastructure. So like thinking about inspections getting done, work orders getting accomplished. There are groups right now that outsource all it. So you can go all third party and you can have inspections done. But I think if you control that product and you have internal technicians and you've got renovation teams and you have inspectors, I think that can give a better outcome than if it's just a competitor started they vibe coded a PM app and then you can connect all these third party. Like I still think that a scaled player like that would win. And also I think another way that scaled players can offer something different is on the like asset management, the data and the reporting. The client types I think that would want to work with a bigger group would either have homes in multiple markets that they would need, or they would want that type of management. And so I think a new layer and maybe a new way for us to kind of like add more value and monetize it is on the asset management layer, especially for these smaller investors that are repositioning, that are growing. And I think that would probably be tough for some of the smaller operators to do. But I think we've got the ability to do that because I think AI will unlock the ability to do that with a lot more data.
The other thing I would say with the bigger players is just we've got a head start. I mean, you're right. Somebody could code something and connect it to a bunch of third-party vendors. The problem is kind of what used to be Angie's List. I think it's called just Angie's now or whatever. They have so many problems with their vendors not getting work done. Yeah. So the great thing about us is we have trust. We have infrastructure. We have you mentioned like our own W-2 techs doing most of this work. And the bigger it gets, the more W-2 techs we can hire and the higher and higher percentage of things we can get done through the system.
Yeah. So kind of talking our own book here, but like how would you counter somebody that would say, hey, you're just kind of selling this narrative because it fits with it?
Well, it does. I mean, it does because I believe the future. So that's why I'm building the business towards the future. Like all of this does make perfect sense to me. I guess the thing I would say is maybe there's somebody that, and maybe this is time for us to jump into the middle, but to me, it just makes so much sense. Like when you use some of these models, these AI models, they are great at decision making based on like a certain set of criteria if you give it the right context. And I just don't see a world where today is as bad as it's ever going to be. And I don't see a world where it doesn't just get better and better and help the end user make better decisions.
I've got a really bad example. So tell me if this is a bad like analogy for this.
Okay.
But you got a local bookshop where you might know somebody, they kind of know your preferences. The selection's not as big, the prices might be higher, but you can go there, get a coffee, sit down, find the book and read it. And then you have Amazon, and then there's Books A Million in the middle. And is that a bad analogy like what I'm thinking about here?
You know, Books A Million tried to be the local. The problem is it's actually really good because let me tell you why. The reason you go to the small bookseller, and we actually have one here in Homewood right down the street that serves coffee.
That's what I'm thinking about. Yeah.
Is because you know the guy that owns it. Mm-hmm. Books A Million, yes, and Barnes and Noble are stuck in the middle because I don't know the guy that owns Barnes and Noble. Mm-hmm. I mean, I can go get a coffee there, but it's still a very transactional relationship. If I'm going to be transactional, I might as well go all the way to Amazon and just get it delivered to my door very cheaply and make my own coffee, right? Yes, I think that's actually a really good example.
Okay, because they have a lot of the same things, but that like Books A Million, and they're big, but they try to replicate it, but they're trying to be all things to all people.
To be clear, I don't think Books A Million's in business anymore. I think Barnes and Noble is. Yeah.
Okay. That's early 2000s. But
Well,
yeah,
but
Barnes
it
and Noble.
but that it kind of like continues to tell the story, right? Like
It was intentional, Matthew.
they're not in business. Yeah. And yeah, I mean, is this to say like a 3,000 unit? Well, let's jump into the mill.
Yeah, let's talk about the mill. Because I probably disagree with you the most on this one, or curious to like hear your thoughts on it.
Sweet.
Yeah.
We've never had some good disagreement on this pod. Spencer always used to agree with me. So
I know.
yeah, look, I think again, the middle, here's the problem with the middle. It's the Books A Million problem. You're too big for relationships. The owner can't have a relationship with, if I have 2,000 units or 3,000 units, I can't have a relationship with all of my owners. Maybe if you have 2,000 units with 50 owners and you just have a bunch of those big portfolio owners. But if you have 2,000 more traditional, like our book is somewhere around 1.2 to 1.5 units per owner, it's going to be almost impossible to have that many relationships. But then the other like reality is you can't drive down the cost to near zero on the, like, let's say the property management fee, because you still have to make money on all of these different services because you don't have the density. And the thing about it is too, like, we're going to be able to drive down the cost of everything around it. Like, we could underprice everything from the property management fee to the resident liability insurance to the work order that's getting done, because when from running their maintenance business, it's an efficiency game. The more utilization I can get out of my team, I make more money. It's cheaper for the owner of the house, and it's better for the resident because I get more work orders done.
The thought I had before, just when thinking about this concept, is there's a book called No Man's Land, and it talks about businesses. And it's like, we've talked about this before. There's a step fixed nature. You have to invest ahead of your talent needs oftentimes. And so is this not just that same problem? Like, this is not that new of a concept, was one thought that I had, because any kind of business that's stuck in that $2 to $10 million in revenue, you've got to hire the management team. You've got to hire costs that don't get spread out over units until you kind of grow outside of that. And so does this not exist today? I think maybe is the question.
I think the answer is yes, because we certainly felt that when we were going through No Man's Land. It's well documented actually on this podcast. If y'all want to go back to some of the early podcasts, I think technology exacerbates it though.
Why do you think that?
Well, because I think like there are going to be people that will grow from zero to scaled in this new world, but I think technology is going to make it. Because I think it's going to be harder to get there because it'll probably take more capital to get there.
See, I actually thought it would take less capital, and I thought it would actually ease the burden, where previously it was really hard to just kind of own in steady state a business in this space. But if you can drive up the number of properties that somebody manages, therefore your costs are driven down. Can you not get some of the data democratization that we've talked about? Like, do you not see a world where?
Yeah, I think as I'm working this out, you may be right, but I think probably the point ultimately is don't get stuck there. If you're going to go, you better go big. Don't get stuck at the 2,000 to 3,000 doors.
And this is like, again, kind of clarifying the point. This is, not density in a market, not 2,000 to 3,000 in a unit, because I think that can work very well. But this is maybe the regional player with.
Maybe. I mean, a boutique owner that manages 2,000 units in one market, maybe, but maybe not. I don't know. That still could be no man's land.
Interesting.
But there's only a few markets that you can grow to 2,000 doors.
And there's only a few players in the single family space. So like, we just went to NARPM. There was a 1,000 unit and up cohort. It was like 60 people in there. So there's obviously more that didn't come, but it was 60 out of, I don't know, 500 or 600 different PMs that were there. I think
there was over 1,000 people there. So yeah. So less than 10%.
Yeah. So less than 10%. Yeah. See, I think if you're in one market and you have density, I think that AI will help to drive down your cost to manage. And I think that group wins in a different way, but I think that they will be fine. But similarly, like right now, if you're just subscale and you're managing across multiple markets, like
let's say there's a world where there's a big owner that's willing to do it for 0%. That means that the 2,000 unit owner is going to have to do it for 0%. So yes, it's going to take more capital because it's probably going to be, their gross margins aren't going to be big enough yet that they're going to be able to sustain 0% without needing more capital.
Okay, that's fair. How would you push back against a single market operator with density is just a bunch of boutique PMs within the same business? You know, it's like a pod system.
Well, the problem is you don't know the owner doesn't know all the clients.
You think that's a problem?
I do. And then you have employee risk.
Yeah.
Then you have 5 small boutique owners that your employee at any one time could up and
and the turnover in this industry is decently high. We heard them talking about it at NARPM. I think it's the challenge that a lot of people
my
feel.
point is you can do it. It's just going to be really hard.
Yeah.
Not that being big is not really hard or small is not really hard. It's all really hard.
It's all hard, but if you were looking on a per unit basis, like you could probably like make a pretty good amount of money if you pick the right in the middle. I think the real upside might be once you get to scale and have scale in multiple markets. I think that's where you could build a really big business.
Yeah. I mean, I'm just thinking about it through the lens of your like Barnes and Noble. Let's say this bookseller down the street decides, I mean, let's think about what would it take for him to become Amazon?
Yeah.
You see the chasm there?
Yeah.
I'm not saying that like there's going to be a PM company that's Amazon, but there's just quite a chasm there. And honestly, they have to walk through the Barnes and Noble experience first to get to the Amazon experience.
Yeah.
It's, and maybe in a more mature market, it's just going to be harder for companies to do that.
Yeah. That makes sense. I think they will look very different. The boutique and then the large scaled players that focus on like, because in my head, like local bookstore and Amazon are very, very different. The chasm is very, very wide. And I'm trying to work out what this means for, there's a lot of people in that, like, and then how do they win? Like, how do you not get stuck in the middle?
Yeah. I think you make a decision whether you're going to be big or you're going to be boutique. I think one of the things that people probably misunderstand is big is not what big is today. I think one day we'll look at 20,000 units and think, that's not big. Like
that's where the multifamily
200,000 or 300,000 units is big.
Yeah. So
I don't mean to suggest that we're Amazon today or that one of these like scale players is Amazon. It will be, somebody will be 200,000 units. Somebody may be 1 million units. And you just think about all the efficiency and the advantage that company is going to have against somebody that's managing 1,000 homes in a market.
So what would you do if you're in the middle?
I think I would make the decision because you still have time. I think this is going to play out over the next few years, but I think I would make the decision to be boutique or make the decision to be big. I mean, the big comes with its trade-offs too, right? Like it's not like my day is anything like it was when I was running a more boutique firm. And I'm not talking to owners. I'm not talking to residents. Now, some people may say that's good, but the people I'm talking to are employment lawyers and transaction attorneys. And, be careful what you wish for because you may get something else. Or the things I deal with today are big, hairy problems that don't have easy answers. So I also can't go on like a week vacation and just stay completely unplugged. So, there's some benefits to being boutique.
That's why you joined Crane, so you can take a Crane break, right?
I did.
Okay.
I did.
What I'm thinking about is I know groups that manage, call it 800 to 1,000 units, and they're at 35, 40% EBITDA margins. And
Today.
they can't go
Today.
smaller. Like that would make no sense for them to go smaller.
Well,
And do they need to get bigger? And like, does that business just compress and like what's 40% margins today becomes 20%?
yes, because if you have a big player that's competing with them on price, I mean, a lot of their margin is coming because they're in probably higher rent markets with higher rents and big property management fees.
Yeah.
And yes, that Jeff Bezos was famous for saying is your margin is my opportunity. That is what the big players are going to say.
Okay. That makes sense. I've kind of worked out in my head live on the podcast, but it's not that you go to zero, but I think your margin just really will get compressed. And then I think it gets harder as your margin gets compressed to fund the next level of growth. And I think that's where things could slow down potentially in that.
Well, your margin gets
metal.
compressed because you're dropping prices to compete with the big guy and you don't know your owners. I mean, that's the thing I keep saying is like you called it no man's land. That's exactly what's going to happen.
Interesting. Okay. I can buy into that.
I knew if we stayed on this podcast long enough, you'd see things my way.
Yeah, it just took a 6-hour drive on Monday for you to convince me of something.
And look, here's the thing I would say about the middle is they are not bad operators. They're good operators. They're just in the wrong shape. The structure is the failure. It's not an effort thing. So I don't want people in the middle to say, oh, Matthew's, you said it, talking his book.
Yeah.
I really believe this. Like, I really believe that that's an area where you don't want to get caught.
Yeah, because the counterpoint would be this has not done, single family has not been done at scale. It isn't working. There's a lot of groups that have folded that have tried to do this. It's a really hard logistics game. You don't have the relationships. Like the counterpoint would be that your vision of it's focused less on relationships. It's more on driving the cost down, providing better data, the execution of it. Like if you don't think that that's reality, and there's a lot of people that probably don't, and the people in the middle might be fine and they might fit kind of, I think I'm just trying to put myself in each, bucket's group of each groups of shoes. That's a terrible way to say it, but like, and think through
Put on the shoes of each group.
There you go. That's a better way to say
it. One of the things we wrote here is kind of like a thought too is, what does this mean for the franchises? Because they have the scale of the brand, but each individual franchise is owned by generally a local operator. How would we think about that? I don't know. My first thought is how much leverage do you get out of the franchisor? Like, does the franchisor helping you buy things at a cheaper rate, helping you make more money?
I would hope so. I hope that would be the case.
Right. I'm using all the doors from all the franchisees to help each franchisee succeed.
Because there is a playbook. And then there are access to other services that I could not get on my own. And then is the brand good enough that it can help me with sales and marketing? You're not starting from zero. So if those things aren't true, I guess, so you would have to have those three things.
You may get some of the best of both worlds, right? Like all your owners, but you get the cheaper scaled systems. But it requires those franchisors to do a lot for the franchisees.
It does. And it comes at a cost. I think what you're trading is like the risk of starting your own and doing this all from scratch. And then there's a playbook and inherently you've got to pay for that. And so there's a little bit less margin there. But I think that they do have the opportunity to do very similar type things and cater to a different group of business owners like the franchisors.
All right. I think we should put a pin in it right here. I think the future is a barbell, and I think we've given both sides of the argument. I appreciate you pushing back on me in the middle. Look, I think this was an awesome podcast. The comments online were super interesting. I think that this is a debate that will rage on for the months and years into the future. But this was really well done. Thanks, Gray.
Yep.
All right, that's it for this week's Evernest Property Management Show. Gray and I will be back here in 2 weeks with another episode. Bye, everybody.